So, welcome again to our webinar, Powering the Modern Loan Process, hosted by Argyle and Ice Mortgage Technology. We're super grateful that you're here today. And we have some awesome panelists joining that I will give a quick intro to now. We have John Hardesty, the VP of Mortgage here at Argyle, Chris Sutherland, the Director of Production Strategy at American Pacific Mortgage, and Melissa Kim, the product manager at Ice Mortgage Technology. Thank you guys so much for being here today. And with that, I'll hand it over to John.
Callie, first off, thank you for setting this up, and you were great to work with as always. And Chris and Melissa, I couldn't thank you guys enough for joining. Short agenda today. We're going to spend the first few minutes together talking about how the borrower experience has evolved. Obviously, Chris, leader in production, Melissa, leader in point of sale, everything. Kind of two unique perspectives as we think about the modern day borrower. I'm going to spend just a few minutes highlighting Argyle, especially our integration with our partners at ICE, very highly used integration. And then at the end of our time together, Chris is going to share a success story along the lines of, how they've digitized the experience at American Pacific, what outcomes are they driving, and what are they seeing from both the cost savings and efficiency in terms of digital tools. I will ask, please, we want to keep this conversational. So any questions you have for Chris, Melissa, myself, we've got team members monitoring the chat, and we'll get those answered. So with that, yeah, let's dive in. You can go to the next slide, Callie. Thanks. The idea is, the big picture, the landscape that we're in. It's been a tough few years. If you think back to 2020, the tech you were using then, and that market has drastically changed 5 years later. But what the data says is borrowers expect automation. More folks are thinking about a digital strategies for verification specifically. And there's early returns from our time at Argyle, right? That processing times are faster with digital tools. But because we have Chris here and we have Melissa here, I want to start with a question to Chris. Chris, like obviously you guys at American Pacific, very large lender. What got you so comfortable, right, to put a digital strategy first? And like, I'm sure there's internal debates and folks on this call are wondering, like, how did you do it? We're going to get there, but like, would love just your take on, does this resonate? And then what's gotten American Pacific comfortable?
Yeah, well, one of the kind of key things to know about American Pacific is, we're really a traditional kind of pure distributed retail platform, and so we really think that we take our marching orders from our branches in most part. Like, what do they need to be successful in this marketplace, and how do we make them look good? And what I started hearing from the branches is called 2.5 years ago. There's some changes with some of the kind of legacy verification providers that were just costs were exploding. And so I started getting emails and forwards from branch managers and producers just saying, hey, this is what I'm seeing on my P&L. Is there something we can do here? Like, how can we potentially test some of these alternatives? And what can you do APM to support us here? And so we had to wrap our heads around what is even credentialed access, right? So we were used to, you get a social and a name and an address or something, and I've got probably more data than I needed. Hopefully it's accurate, but once we understood that piece, and it's like, oh, this is like half the ways that I experience a service as a consumer myself, that I personally don't love registering for new websites. I use my Gmail to automatically log in, and years ago it was Facebook. Once we wrapped our heads around that piece, was like, oh, this is just a different way to get to the same data, and let's just work through how we operationalize that. It was a go, right? There's a lot of other advantages in there that I'm sure that we're going to talk about. But it was very much led from our branches.
And and maybe this is to both you and Melissa, but another question, because and I know Chris, we've talked about this a ton, is there is so much tech out there. To your point, you started looking, you're getting blown up, right? Uh, how would you like articulate or like what's your thought on like assessing the current mortgage tech stack to drive automation like this? Like what should people be thinking about in terms of that? And obviously, Melissa, I'd love
Yeah.
for you to jump in here too as well.
I don't know how satisfying this answer is going to be, but we do vet a ton of technology, and it seems like there's a new POS or future LOS or credit service or verification. They pop their heads up every single day, and so for us, this may be unusual. This may be what everyone else that's attending this call does. We've really begun for a while now assessing the competence of the people on the other side of the Zoom or the Teams meeting or whatever that might be, and how much trust can we establish there, and then how can we place those prospective relationships into positions where they're kind of forced to execute before we're in any kind of like long-term agreement, and then we start worrying about the concept, right, or the business case, because we've had a lot of sure we can do that turned out no, they really couldn't, right? So the concept for sure is important, but we very much assess based on who we're dealing with.
Got it. Melissa, anything you want to add there from your point of view?
But no, I mean, I think I can definitely echo that sentiment. I think, our customer, obviously from an ICE perspective, is the lender, right? Like Chris and his team. But at the end of the day, the product that I represent has to serve Chris's customers inappropriately, right? In order for him to be successful. So it's kind of a two-step for us is that the lender's our customer, but the lender's customers is also who we also have to keep in mind, because at the end of the day, the borrower experience is going to be the most important driving factor, right, for Chris and his team in terms of that, capturing that customer and retaining that customer.
Yeah, I think Chris, you brought up a good point too. I remember our early conversations when I first met you. That sentiment on let me see it in action, right? Is a good play. And frankly, I think at Argyle we agree. I think you've probably heard if we have some current clients on this call that we will bet on ourselves to show you that this can work, right? From every which angle. And then when you're happy, that's when I think, Chris, to your point, we really dive into the future of what a long-term partnership could look like. So, two valuable tidbits there. And I love the idea of like assessing trust across a camera. Like that's a really good point. Um, well, cool. So I think the next portion of our time together, for those that you aren't familiar with Argyle, I want to give just a few slide overview because we're going to dive into a lot of details on American Pacific and how they're leveraging us within the ICE ecosystem. But if you don't have the context, then it might be a little hard to piece it all together. So who we are, what do we do? Argyle focused on consumer powered verifications, whether that's income and employment, direct source banking, even now with the newer product that we call Doc VOI, which is our AIM eligible OCR product in the market today. We are hypersensitive, and Chris is going to laugh because I've said this a million times on GSE eligibility at everything that we do. We're really careful on making sure that if we're going to bring a product to market, that it provides downstream benefit to our lenders, aka rep and warrant relief, if you're interested in that. But everything you're going to see or Chris is going to talk about today is around, validation and the agencies. We're proud partners of the ICE ecosystem integrated with, Consumer Connect and Encompass alongside additional point of sale and LOS providers in the space. Why we always call that out, just because we want to meet the lenders where they're at, where they operate, where a production person operate might be different from a closing team, right? We try to meet our experiences on the persona that we're supporting. We are also hyper focused on customer success and adoption. I'm sure there's folks on this call that have tried consumer powered verifications before, but have struggled to see tangible outcomes in terms of conversion, how often are borrowers going through that experience. We have the playbook, we have the team, and we take pride in making sure that if you're going to integrate this into Consumer Connect, here's the talk track for the LOs when they get a question, or here's our Encompass integration. Here's how you execute. Here's the talk track to the borrower when you're sending out the link. So very keened in on to driving adoption of these products. And then just to tease it out, you put it all together. What are we doing? We can save you upwards of 80% against legacy providers and some additional benefits that I don't want to spoil Chris's piece here at the end. Um, Going to the next slide. But one shift that we have made, I think, over the last year and a half is thinking about performance of our product in the point of sale and how does that work in the waterfall, whether it's our core solution in payroll, our banking solution, or even our Doc VOI solution. We have got a lot of our clients to think differently in putting services up front. And I'm going to pause here because I think this is a really critical point to this idea of a POS LOS waterfall that works. Chris, back to you. You have leveraged this at scale across American Pacific in the point of sale. The biggest objection to that is I'm not covering costs for, borrowers to do this up front. And excuse me, it's fair, but what got you comfortable with that at such scale at American Pacific?
Yeah, there's definitely a lot of hand wringing on our end, and we had to get to a place where our branches understood the opportunity because in our case, those expenses, those upfront verification costs live in the branch, and so it did kind of just come down to a math equation. So we understand what our pull through is, right? So for every application that we get, how many loans do we fund and therefore pay for all of those other services? And the feedback from our branches was like, hey, we like this tool. We like how you've implemented it in Encompass. It's requiring our people to do a little more follow up than that. If we could just move it up sooner, that would be great. We just don't want to necessarily see our verification bill explode right up front on borrowers that we don't know if we're going to do a loan for them or not. But so we started looking at pull through, and the estimated success rate, and Argyle helped us a lot with that. This is what we're seeing with some of our kind of pilot trial partners, and how many conversions they're seeing right up front in the application. And when we did the math, because I can vouch for those savings that John was just talking about. An Argyle VOIE is significantly less than per connected employer than those legacy services. So it did just kind of come down to how many applications do we get? What is the expected success rate? What if I take 5 or 10% off of that and get really conservative? And so there's only upside built into this equation. And then what are our expected costs? And it was very compelling. And so we moved it into a proof of concept. And for the first time probably ever, we spent like less than 3 weeks in pilot, and then went, here's what we're already measuring. Here's the numbers we see for these specific branches. Here's how that translates to the rest of you population of branch managers. We're going to turn this on by default, and you can email us if you want to opt out. And that is a very counter strategy to the way we typically had deployed new technology and services in the past. And it's been an overwhelming success. I mean, we had to do the math and get conservative, and then like we talked about earlier, John, like prove it.
Mm-hmm. Yeah. So I mean, I was shocked, honestly, a little bit when you're like, "Hey, we're going full scale, like Monday."
We're doing
Okay,
this.
let's do it. Um, Awesome. So just a quick story because I feel like that's a common, not a objection, but it's fair, right? And the formula, and I'm sure we'd be happy to share the formula that we worked with Chris on how to assess whether it's database products versus Argyle, et cetera, and how to get there to that kind of simple formula that you need to make that decision. I guess Melissa, from your seat,
Mhm.
how have you seen digital tools in the point of sale? Like, have you seen philosophical changes with folks pushing more product?
I mean, I think, everybody in the industry is aware, right, of tight margins and the marketplace that we're in today when it comes to mortgages. And I think from a technology provider, right, as Chris has said, they've decided to go all in. And I think from my perspective, from a product perspective, is how do we deliver services like Argyle to our customers, but allow them to use it on the way how they see fit, right? And so it's not a one size fits all where you turn it on and everybody gets everything. And for us, it's that flexibility. So lender flexibility is a key point for us. Is when do you want to enable it? How do you want to enable it? And then which consumers do you want to allow to have access to the integration? So for us, it's providing that flexibility and putting it in hands of our customers, the lenders, to say, okay, this is when I want it to trigger, and this is when I want it to show to my consumer. And so that flexibility is, having it enabled, but having the option to say, I only want this integration service to be available if this happens in the application, right? So that type of conditional type of configuration gives that power to our lenders so that we as a product is delivering something that is generic enough where everybody can use it. So if you opt to enable it for everyone, great. If you want to be very specific on where this integration shows up, you also have that flexibility.
It's a
Yeah.
really good point, Melissa, because that was very much part of our decision-making process when we did decide to go all in was, hey, we can a la carte pull this branch out or modify this workflow so that, yeah, we're implementing something at a broad scale, but if we need to curate that, we can. And if we couldn't, we probably would have dragged our feet a little bit.
So yeah, I think the theme there, Melissa, that's such a great point on, again, going back to a question earlier about what you should be assessing in current technology. It's how configurable are the flows that you want to put in front of your consumer. And I think you're spot on. You need to meet the lender where they are and have the optionality to go and execute the way they want to execute, right? And I think that's super critical. Um, Maybe just the last few slides here on Argyle, then I promise we're going to get to the big reveal here. You can go to the next slide, Kelly. Perfect. Just again, we can integrate into a lot of systems, whether you're a proprietary in-house solution, variety of point of sales and LOSs like Encino, like Encompass, Byte, etc. Are again the theme here is that we'll meet you where you are in the industry. We service, obviously, we're in the business of reports. So we'll give you your standard VOIE report, VOI, VOAI, VOA, across our systems. We can aggregate data and get it to you. But what's different about Argyle, and I think is a really good, I don't know, value proposition of our business is not only is it reports, Chris's team at American Pacific is getting year-end pay stubs, is getting actually direct source documentation that lives there. Why is that important? Oh, you have a variable comp borrower and you have to usually go request that information. Not anymore. So we've kind of innovated in this segment to give you more at a lower cost that drives better outcomes. And that's kind of our ethos as a company. And then, as I mentioned earlier, everything we do, Fannie Freddie approved, giving agency rep and warrant relief. But the two kind of core Encompass and ICE integrations that we offer is one in Consumer Connect. You want to go to the next slide, Callie? Thank you. We, again, that digital experience that Chris was talking about, we've embedded ourselves into Consumer Connect to allow our lenders the option and the configurability to initialize our service upfront. And obviously, with that integration into Consumer Connect, everything's being populated down. So we take a really forefront kind of approach on pre-population of information, whether that's IRLA information, reference IDs for the agencies, even some interoperability for the systems to work together, and the POS and LOS. Everything from a point of sale perspective is fueled to kind of speed up processing times. And then in Encompass, where we're at, is we actually just, released a big Encompass 2.0 rebuild from the feedback directly from our clients to really streamline the ordering process, to bring more visibility into the Argyle platform and Encompass, and just to allow for, again, faster decisions, even downstream. So we're super proud of that. We've just actually brought almost everyone over to Encompass 2.0. Funny enough, Chris Sutherland called me the other day and said, "Hey, I think this might be too simple for my team." But that was a laugh that I got, Chris, when you called me that. But anyhow, so that's kind of like the overview of Argyle. I don't know, Melissa, if there's anything else you want to add from the ICE perspective. Obviously, great partners of Argyle, but we love what we're doing with you guys, and
Yeah.
lenders like
Yeah.
Chris are leading the way there
Yeah, I
too.
mean, I think the most important part from a consumer standpoint is that, this is a embedded experience. We don't want the consumer to feel like they're working with, right, one site versus another site. And so, giving that cohesive, it's part of the application flow, that streamlined experience is that just, it needs to feel like that is part of the lender's application and not somewhere else where I'm going to do another task, right? And so I think that's the most important part of the integration is that, having that embedded experience for the customer, so that they're not feeling like it's any sort of I'm giving my information here and yet I'm giving my information elsewhere.
I can't, that point can't be underlined enough to getting success in this credential space. Is your borrower, as they enter your point of sale application, is kind of at your mercy, right? But they're also judging their future experience based on how that application goes. But you can put them into a track, right? So I need you to complete your name, phone, and email, and past address, and your current address. And once they get to that income piece, you can funnel them directly into, this is how we validate your income and employment, right? Versus if you're not doing that, and this is why we found this embedded piece so compelling, then it is somewhat fragmented. You're now sending an email, right? You're sending a link in some way, whether it's through SMS or email, inviting them to try this outside thing. And we do have success there. And what's been one of the things we've been most pleased with is from the time that we went full enablement right up front in the application itself, and that borrower kind of initiated embedded experience, our secondary kind of use and more manual orders via email, via SMS skyrocketed because our branches were getting more comfortable with the process. But the reality is, you're never going to have more success than you will right up front in the application itself because they're on a track.
Absolutely. I think it's an interesting dynamic that we've seen where, as more folks are seeing when they get a loan file in the point of sale, they see the Argyle verification, they see the pay stubs, the W-2s, and that means more processors or ops are seeing that. They're more inclined to say, "Hey, oh yeah, Argyle wasn't here. I should go order it." Right. So I think it's kind of like an indirect way of driving more adoption downstream, but they're also seeing the benefits of it working up front, more often than not. So all right, well, let's transition here. Again, not to put you back on the spot, Chris, but I would love for you to just share a few minutes on, you've kind of already hinted at some things, but let's talk about the success story. What got you comfortable with Argyle, the issues you were facing, and what were the results?
Well, so yeah, I did touch on it. It began with our branches saying, hey, this is what I'm seeing in my P&L, and it's a problem, and we need to do something about it. Is there other ways that we can get this same data? And we did do that vetting, and ultimately got to a place where we felt really good about a trial with Argyle, and you guys made it really easy for us to to get our hands on the product without some kind of major, commitment. And so we began like we do most things in kind of like pilot phase, and we always start with kind of the most vocal, innovative, early adopter kind of population of branches, but we know that are going to give us really good feedback about how the process is going. And so I think it was July last year we came out of pilot and released Argyle to the whole organization via that initial Encompass integration. Trained our people. What we kept hearing from our branch managers, because they frankly they very much saw it as this is about expense. It was very much expense led. We've recognized other value, and we'll get into that in a little bit. But for our branches, it was I need to save money. I need my verification expense to go down. And the struggle that we kept hearing was, was that fragmented process we just talked about, was, branch managers counting on a processor to trigger this thing to occur, that we're working with them to automate that thing to occur, but it still requires what I call bird dogging, right? So to really get a high conversion rate on a credentialed service where you need the borrower to provide their information directly to get access to that payroll platform, you needed a processor or an LOA or a loan officer to go, hey, I just sent you this. This is why we need that. And let me know if you need any help, or call me as you're going through that process. And so, as we started having conversations around like, what would it look like if we put it right up front in the application? It was like, well, that would solve that, because now nobody needs to remember anything. The borrower is going to lead this experience, and then we can kind of automate or create business rules from there. So in February of this year, late February, we came out of a very brief pilot. I think it was like 2.5 weeks, where we were, I was looking at it on a daily basis and talking to the branches that had been in that trial kind of period, and just went, nope, we're doing this, and we're going to deploy it on an opt-out basis, right? And even the opt-outs created some very interesting conversations around sensitivity. We did have some of the kind of old hands that were like, I don't want my borrower to be sharing their password, and we're like, cool, they're not sharing their password. They're actually logging directly into their payroll platform and authorizing that access, which they can disable if they want to, right? And so we did have a lot of those kind of like, yeah, I want to say we may have had 5 hands raised in the first 2 weeks of that go live, saying, nah, we want out, and less than half of those actually persisted in that opt-out process. From February on, we saw an absolute hockey stick in verified income and employment with Argyle, to the degree that we meet with both agencies monthly. And we told them what was coming. We said, we think we're going to see a real ramp up in validations, and see some rep and warrant relief, and et cetera. And a lot of pats on the back from both agencies for APM for just our use of this kind of technology. So there's a relationship aspect there for us as well, maintaining really good, strong relationships with Fannie and Freddie, and making sure that we're using the kind of tools that they're bringing to the table as well has been really important for us. So yeah, when you're seeing 700,000 plus saved over the last 5 months, that's going back to, I think, the beginning the 3rd week of February. And as of yesterday, when I did that look back, we're right around the $900,000 mark. The other thing that blew my mind, frankly, was the reduction in cycle time. I wasn't expecting that. I should have. John had been right up front over a year ago. Hey, you're going to see, probably it's going to take less time for your applications to close. So yeah, I kind of get that conceptually, but we'll see. We have a lot of branches that do business kind of their own ways. There's a lot of autonomy there. we'll find out. And the cycle time is clearly dramatically lower on loans that have an Argyle verification versus the ones that have more of those traditional verification products. So we're thrilled there. It's not as sexy of a number, but on our side, it absolutely is. We've actually seen 0.6 days, more than half a day reduction in processing to submittal to underwriting milestone as well for loans with Argyle verifications, which is your percentage wise is like close to 20. So it's a huge reduction on cycle time just for that critical stage that every loan officer is like, when are you sending my loan to underwriting, right? And so for close to a fifth of our loans, we're able to say like, hey, or we saw about a fifth reduction, right, in timeline for those loans that have Argyle verifications. So it's been a runaway success. It really has.
Yeah, we focus a lot in early conversations around cost. Like we can get you cost. It's harder for folks, I think, across the industry to really believe that like, hey, this new digital first strategy, this consumer permissioned verification is going to have a material impact on your processing times. And when I see this, Chris, for all the Argyle team, it's like we're doing our job at this point. We're not only saving you money, but we're improving your processes. And I think a lot of this, to what we've talked about today, is around how we operate up front, how we're transferring data downstream, we're pre-populating as much as we can. We're bringing in pay stubs and W-2s. You don't have to call employers anymore, right? Like it's actually the little product pieces that have been a part of Argyle for a long time that are just times 50 when you put it into production at scale, like you guys are doing. So like from our end, and I also think a lot of this is around the way that you have managed the onboarding, the testing, you give us feedback, we move quickly, right? We make changes. I think that's another thing back to the provider piece of you should always be trying to innovate, next to your lenders, not in front of them, right? And
I,
you've helped us out a ton there.
John, that's where we can give you a lot of kudos because of how responsive you guys have been. You actually do listen to us and understand what we're trying to communicate, and in several cases have kind of blown our hair back with how quickly you responded to it and executed on what we were asking for when it was within reason or technically possible. But we've been very pleasantly surprised by how great a partners Argyle has been for APM. It moves the needle.
Awesome. Well, obviously, the feeling's mutual with you guys, and I do have a few questions. Let's see. For Chris, how have you been successful in getting sales folks to adopt this new technology? This has been a more challenging group for us.
Yeah, I don't. There's no secret sauce there for us. We, salespeople look to other more successful salespeople for ideas and guidance and kind of validation of what's in front of them. And so, with Argyle and many other solutions, we identify that cohort that we know is going to resonate with the larger kind of population, and we prove concept, right? And we measure and we get their feedback, and there's testimonials, and we do videos, and we promote that internal. It's not us. It's not Chris at corporate saying this is a cool new thing and you should do it, and it's going to save you money, or your borrowers are going to have this experience. This is your peer that's saying this is what they found, right? That's really been our approach.
Got it. Another question for you, Chris. Chris, when you look into Encompass, do you find files where VOIEA services are run and completed, yet W-2s, pay stubs, and asset statements are still collected by the LO? If so, why do you think it's happening, and how do you address this so people have trust in the VOA process and data?
Yeah, we definitely do. And so, that's we still do, even on loans that, were borrower initiated pretty frequently. And so there's a couple things going on there. There is habit, and habit is really tough to break. And if you're a loan officer, you are probably setting that expectation that, hey, when I'm sending you this application link, this is what you can expect, and this is the process that I hope you go through and experience. But they're also in many cases going to say, and hey, while you're at it, can you please go ahead and upload your last two pay stubs, your W-2, your ID, your whatever. So there's definitely a habit aspect. One of the things that has really hit our radar, and we're still working through, is, we have our point of sale set up to automatically and kind of dynamically request some of those items from the borrower. And as of today, it doesn't necessarily recognize, hey, we've already got these things at the point of sale. And so that's something to definitely work through. Is, I do think it very much is habit. And I think that probably is the majority. But if you have automation requesting that needs list, even if it's dynamically, if it's not dynamic enough to understand, hey, we have successfully already put pay stubs and W-2s or VOA into these placeholders, you're going to have some anxious borrowers that do what you ask them to do.
Let's see, one more here. Melissa, it
Mhm.
says, how is AI being used to drive better experiences in Consumer Connect?
I think AI is such a hot topic, right? And it's very general and it's huge. And I think, we're still learning, right? Because mortgage historically, and I'm not historical, actually, mortgage is a very high touch human experience, right? And so I don't think, AI, I mean, can it be leveraged in certain aspects of it? But I think, capturing information, right? How to ask for the next thing based on the information that you provided. Like in those aspects, I see benefits to having that data-driven intelligence, not so much taking away the human experience of the right of for the consumer, because mortgage is still your biggest investment and your biggest asset, and lots of unknowns to most consumers when it comes to mortgages. I mean, I think for us in this group, right, we've been engrossed in it for so long. I know that every time I go through a transaction and my husband asks me a question, I look at him like he has two heads. Like, what do you mean you don't know? We've done this 1,000 times, but it's not common to them. And I think, we have to be super, super mindful about, right? Where does that replace that human experience? So, I mean, that's kind of been our perspective. And I think, it's not a topic that we're not aware of here at ICE, but it's something that we're being super mindful about, right? And just still and taking it as we learn, right? And where to implement it in the right places.
All right. Well, great answer there, Melissa. I think that's all the questions that we have. Again, first, I want to thank Melissa and Chris for joining and telling your story and being great partners to Argyle, Melissa with ICE, and then everyone that attended. Thank you. Obviously, we'll push this out afterwards, but we appreciate everyone's time today, and I'm sure we'll be talking to everybody soon. Thank you.
Awesome. Thanks for having us.
See you guys.
Okay.